right, so this is Chapter 9. Practice problems for class, Part 2. Okay, so here we are, number 10. Riley operates a plumbing business, and this year, the 3-year-old van he used in the business was destroyed in a traffic accident. The van was originally purchased for $20,000, and the adjusted basis at the time of the accident is $5,800. Okay, so obviously he'd been depreciating it from the time he purchased it, because he purchased it at $20,000. Its adjusted basis is now $5,800, so he'd been depreciating it across those years, which is what he should have done. Although the van was worth $6,000 at the time of the accident, the insurance company only paid him $12,000 for the loss of his vehicle. What is the amount of Riley's casualty loss deduction? Okay, so here is the thing. His casualty loss deduction is the difference between his basis at the time of disposition and the amount received. Okay, so his basis at the time of disposition, $5,800. His amount received is $1,200. So the amount of his loss is $4,600. So this is a business casualty loss. Okay, so moving on to 11. Bill operates a proprietorship using the cash method of accounting, and this year he received the following. Okay, so we need to figure out how much income should he realize on Schedule C. And remember, Schedule C is where you put all of your sole proprietorship or disregarded entity related income. Okay, so he operates a sole proprietorship, cash method of accounting. He gets the following. How much income should he realize? Okay. So what does he get? He gets $230 in cash from a customer for services rendered this year. Okay. So $230 in cash, right, for services rendered this year. So yes, that is income that he should realize this year. A promise from a customer to pay $174 for services rendered this year. All right. So this is a promise to pay. Is this current income? No, not current income, since he is a cash method taxpayer. All right. Tickets to a football game worth $185 as payment for services last year. Yes, this is going to be an amount realized this year, and it's going to be realized in the amount of $185, and it's payment for services performed last year, right? So remember, this is not accrual method, this is tax method, so therefore he recognizes and realizes the income when he gets the payment. You got the payment this year. A check for $196 for services rendered this year that Bill forgot to cash. All right. So what do we know about this $196? Well, he had the ability to control that payment. Since he had the ability to control that payment, this is constructive receipt. Even though he forgot to cash the check, The IRS doesn't care that he forgot. He had the ability and he had access to that check, so that counts as income. And unfortunately, I cut off option E here on this, and I didn't notice that. Option E is $611, and that is in fact the correct answer. Okay? All right, let's look at number 12. Lots of plumbers in this practice set. Beth operates a plumbing firm. In August of last year, she signed a contract to provide plumbing services for a renovation. She began the work that August. So she began the work that August and finished the work in December of last year. So August of last year to December of last year. However, she didn't bill the client until January of this year. And she didn't receive payment until March, when she received payment in full. When should Beth recognize income under the accrual method of accounting? All right. So under the accrual method, all right. The accrual method says that income is earned when all events, when the all events test is satisfied. Okay. So when the all events test is satisfied, so that's on the earliest of the date that the service was provided, the service is billed, or the payment received. Okay. So it's the earliest of 3 dates. All right. Service provided, right? Service billed, or payment received. Okay? So what is the earliest of those three, right? So let's go back and read. Beth began the work that August and finished the work in December of last year. So the service was provided in December of last year. So that is the earliest date because that's when the service was provided. It was completed. And so December of last year is when you have to recognize the income under, again, the accrual method of accounting. It's very important that that's the accrual method of accounting. Okay? Let's look at number 13. We've got Colbert or Colbert, depending on which way you'd like to pronounce it. So Colbert operates a catering service on, again, the accrual method of accounting. In November of year 1, Colbert received a payment of $9,000 for 18 months of catering service to be rendered from December 1st of year 1 through May 31st of year 3. When must Colbert recognize the income in his accounting if his accounting methods are selected to minimize income recognition? So here we have a situation where Colbert wants to minimize income recognition. And that makes total sense, right? So again, he is an accrual method taxpayer. So since he's accrual method, prepayments for services can be deferred for 1 year. If the payments are also unearned for financial reporting purposes. Okay, so prepayments for services can be deferred for 1 year if the payments are also unearned for financial reporting purposes. Okay, so what do we got? We've got received $9,000 for 18 months of catering services, okay, to be rendered from December 1st of year 1 through May 31st of year 3, okay? So we've got 18,000, right? Or excuse me, we do not have 18,000. We have 9,000. For 18 months. So that means we have $500 per month, okay? And so since we have $500 per month, all right, and services can be rendered December 1st of year 1 through May 31st of year 3, okay? B is going to be our option because we can recognize $500 in year 1, right? And then we can defer the others for 1 year and recognize $8,500 in year 2. And that is the last one on that page. So now we do number 14. Okay, so we talked about the all events test for services. This is the all events test under the accrual method for sale of goods. Okay, so when does the all events test under the accrual method require the recognition of income from the sale of goods? Okay, and we've got some options. So when do we have to recognize the income, right, for the sale of goods? When the title of the goods passes to the buyer, when the business receives the payment, or when the payment is due from the buyer, okay? And the answer is D, right? The earliest of those 3 dates. So the definition of all events is when the right to income is fixed and determinable on the earliest of the 3 dates listed. So okay, so the earliest of those 3 dates. Okay, moving on to number 15. Which of the following types of transactions does not result in the immediate recognition of revenue or expense for a small business under the cash method? So which of the following types of transactions does not result in the immediate recognition of revenue or expense for a small business using the cash method? All right. And the answer is sales of inventory on account. They need not be accounted for using the accrual method if the taxpayer has average annual gross receipts of $30 million or less for the prior 3 taxable years. So for small businesses, and small businesses are 30 million or less in receivables, or I shouldn't say receivables, in gross receipts, not gross income, on average for the past 3 years, right? For small businesses, sales of inventory need not be accounted for with accrual. So they don't need to use accrual method for inventory. Okay? I think that was, nope, there's one more on this page. Oops. All right, so now we have Mike. Mike started a calendar year business on September 1st of this year by paying 12 months of rent for his shop at $1,000 a month. What is the maximum amount of rent that Mike can deduct this year under each of the accounting methods? Okay, so let's check it out. So he started his business on September 1st of this year. September is the 9th month. He paid for 12 months of rent right now, and it's $1,000 a month. What is the maximum amount of rent that he can deduct this year under each of the following circumstances? Okay. $12,000 under the cash method and $12,000 under the accrual method. Well, he can't do $12,000 under the accrual method because, remember, you have to recognize expenses as they are accrued. So that would be ratably, so that won't work. $4,000 under the cash method and $12,000 under the accrual method. Again, that would be incorrect, okay? $12,000 under the cash method and $4,000 under the accrual method. Well, let's look at that. So September is the 9th month. So September, October, November, December. Okay. So for this year, yeah, I agree with the $4,000 under the accrual method. And can he recognize $12,000 under the cash method? Well, yes, he can, because he can deduct 12 months of rent by applying the 12-month rule. All right. So remember that cash basis, and that doesn't really look like month, so I'm going to erase that. So remember that cash basis taxpayers can utilize the 12-month rule to maximize their expenses. So he can deduct up to 12 months of that rent currently this year. So C would be the correct answer. And so now our last two multiple choice problems, number 17 and 18. Number 17, we've got Joe is self-employed, and he's an electrician, and he operates his own business on the accrual method. This year, Joe purchased a shop for his business, and for the first time at year end, he received a bill for $4,500 of property taxes on his shop. He didn't pay the taxes until after year end, but prior to filing his tax return. Which of the following is a true statement? Okay. So he is self-employed, and he operates on the accrual method. Okay. So what do we know? We know he can deduct taxes accruing this year, or he can elect to deduct them as recurring items. All right. So if neither election is made, then he has to deduct them in the year paid. Okay. And so all of these things are actually true, because if he elects to treat the taxes as a recurring item, he can accrue and deduct $4,500 of taxes on his shop this year. That is 100% true. The taxes are a payment liability. That is also true. The taxes would not be deductible if Joe's business was on the cash method. That is true, because he didn't pay the taxes until after year end, right? So he would not be able to do that. He would not be able to deduct them if he were on the cash method. And so unless Joe makes an election, the taxes are not deductible this year. That is absolutely true. okay? And then finally, we have number 18. Ajax Computer Company is an accrual method calendar year taxpayer. They have never advertised in the national media prior to this year. In November of this year, they paid $1 million for television advertising during a super sporting event scheduled to take place in early February of next year. In addition, in November of this year, the company paid $500,000 for a one-time advertising blitz during a professional golf tournament in April of the next year. What amount of these payments, if any, can Ajax deduct this year? Okay, so let's go back through. So we're an accrual method calendar year taxpayer, okay? They've never advertised, blah, blah, blah. In November of this year, they paid $1 million for a television ad that is going to run in February, right? In addition, in November of this year, they paid $500,000 for a one-time advertising blitz during a professional golf tournament in April of next year. Okay, what amounts of these payments, if any, can they deduct? All right, so remember from the PowerPoint video that there is this thing called the 3.5 month rule. And what that says is he can actually deduct this $1 million, okay, for the television ad, because under the 3.5 month rule, payment for a service qualifies as economic performance when the actual performance of the service is expected within 3.5 months, right? So in November of this year, and then performance is going to happen in February, so that's within 3.5 months, okay, of the date of the payment. Now, he could deduct this if it qualified as a recurring expense, okay? So if he had like a commitment to do that ad campaign in future years, then that could be deductible as well. But right now, the only thing that is deductible is that $1 million, because performance happens within 3.5 months, of payment. All right? And that is the end of the Chapter 9 in-class practice problem videos.